Today we're cracking open the economic showdown between the world's two biggest players, the United States and China. In 2025, the US economy leads in nominal GDP at roughly $30.5 trillion, while China follows at about $19.2 trillion, around 1.5 times smaller. But when it comes to purchasing power parity or PPP, China actually edges ahead, $40.7 trillion compared to America's $30.5 trillion. Depending on how you measure, either side can claim the upper hand. Back in 1960, China's GDP was just 11% of the US's. Fast forward to today, and it's risen to over 60%. The transformation has been staggering. China has shifted from an agricultural backwater into a global manufacturing powerhouse, and now an emerging tech leader. In terms of growth, China's pace still outstrips America's. In 2024, China grew at about 4.6%, while the US managed 2.7%. But here's the nuance. Because the US economy is bigger, even slower growth adds more in raw dollars than China's faster growth. Speed on one side, size on the other. Trade tells another part of the story. Over the 5 years from 2020 to 2024, the US accumulated a massive $1.6 trillion goods deficit with China. Every year, America imports far more than it exports. In contrast, China posts regular surpluses, giving it financial firepower and leverage abroad. In March 2025, the US posted a record trade deficit of $140 billion. Meanwhile, just a few months later, China booked a $98 billion surplus in July. Yet, cracks are showing. By August 2025, China's export growth slowed to just 5%, down from 7.2% the previous month. Weak US demand and tariff threats are taking their toll. Meanwhile, the US deficit widened to $78.3 billion in July. Both sides are clearly feeling the strain. Currency has long been a battlefield. For decades, critics accused China of devaluing the yuan to keep exports cheap. But in mid-2025, Beijing surprised markets by strengthening its currency to its highest level of the year. Analysts saw this as a diplomatic gesture, an olive branch, in the middle of tense trade talks. But economics cannot be separated from geopolitics. In September 2025, China held a massive military parade, with Xi Jinping standing alongside Vladimir Putin and Kim Jong-un. It was more than just a show of force. It was a clear signal that China is forging deeper ties beyond Western alliances. Some economists warn the world may be dividing into two economic blocs, one led by Washington, the other by Beijing. China and India are even building alternative payment systems that could sidestep US banks and weaken dollar dominance. If these take off, they could rewrite the rules of global trade and finance. Meanwhile, US companies face tough choices. Despite tariffs and political headwinds, 3/4 of American firms operating in China say they're staying put. Many admit they're too tied into Chinese supply chains and markets to leave. Some call it a trap. Staying means navigating political risk, but leaving means losing a massive market. The rivalry also highlights two models of capitalism. The US is experimenting with industrial policy, even taking stakes in companies like Intel and Nvidia to secure its tech future. China, by contrast, has long embraced state-driven capitalism, directing billions into strategic industries like electric vehicles, robotics, and green energy. Two different playbooks, one race for dominance. Artificial intelligence is perhaps the sharpest front in this economic rivalry. The US is chasing the dream of artificial general intelligence, machines that can think like humans. China, meanwhile, is focused on practical applications, using AI in healthcare, farming, logistics, and governance. Pragmatism versus vision, two very different strategies, both with global consequences. But the rivalry isn't without risks. Rapid decoupling could rattle supply chains. A misstep over Taiwan could spark a crisis with global economic aftershocks. On the other hand, if managed carefully, this competition could benefit rising economies like Vietnam, Mexico, and Poland as global companies shift production away from dependence on a single country. So, who's really winning? America still leads in nominal GDP, global finance, and services. China, on the other hand, dominates manufacturing, trade surpluses, and has momentum in key industries. In AI, the US has cutting-edge research, but China leads in mass deployment. The scoreboard looks different depending on what numbers you focus on, but one thing is clear. The contest is far from over. The rivalry between China and the United States isn't just about numbers. It's about systems, strategies, and visions for the future. Will the two giants clash, cooperate, or carve out separate spheres of influence? However it unfolds, the outcome will shape the global economy for decades to come. Thanks for watching Macro Mind Global. Don't forget to like, subscribe, and stay tuned, because the future of money, markets, and power is being written right now.